Hi, today we will understand the entire accounting cycle from recording the transactions and the entire journey till the company published the financial statement. All this in 10 steps. First, what is accounting? Accounting is the process of recording, classifying, analyzing, and interpreting the business transactions which can be measured in terms of money. Thus, accounting keeps a permanent record of all business transactions, so a collective process of identifying and analyzing each record is called as an accounting cycle. So let's understand the procedure each company should follow. So the first is identify transactions or events which happen in your firm. We should be able to quantify in terms of money, that is in rupees, dirhams or dollars or in any other currency. So the secondly, source document. We should have a proper trait or evidence that the transactions actually happened in the firm, like in terms of bills, invoice, voucher or receipt. So in a company, each transaction has to be recorded. So the third one is journal. What is journal? This is called as a source document in a company. To keep all the records, we need something. So that is called as journal. So with the help of source document, you will record a transaction which is called as journal entry. So when you say journal entry, it is not a single entry. There are many books, okay? So which we will discuss it in later stage. So the next step is posting to ledger. When you are posting in journal entry, it has two parts. Okay, the journal entry will have two parts, that is debit and credit. All the entry have to be recorded in journal. Okay, the entry which is recorded in journal has to be posted in ledger, which is called as a general ledger. Okay, so in ledger there are so many general ledgers which are classified in 6 kinds of accounts, okay, which we can discuss it later. So whatever the accounts you think of, you should be able to identify out of these 6 kinds of accounts. Fifth is trial balance. So what is this trial balance? Once you post all these journal entries, you can generate a report from the system which is called as trial balance. This is a financial report which shows the closing balance of all the ledgers at a point in time. It will have a debit entry and a credit entry. The goal is to confirm that the sum of debits are matching with the sum of credits. So the next step is 6th step worksheet. So in this stage, an accountant has to check the errors if any, or he has to make any adjusting entries or the rectification entries. He has to keep a record in a worksheet for a future reference. And the 7th step is adjusting entries. Before preparing a financial report, we have to pass all the adjusting entries, which is popularly known as prepaid expenses, outstanding expense, accrued income and deferred income. And apart from this, many closing entries are there which we will learn later. Okay. So come to the 8th stage, which is adjusted trial balance. So we have to prepare adjusted trial balance once all the rectification entries have been done. Okay. So let's go to the next step, which is called as financial statement. Finally, we will prepare a financial statement. So there are many kind of financial statements which we can generate at the end of the year. Okay, so the popularly it is known as profit and loss, balance sheet, cash flow statement, statement of changes in equity, and notes to financial statement. And the last step is closing the book. So now we are moving to the next year. So now we need to close the books of previous year. That means what? We have to close the account. So that means which all accounts we have to close? Mainly we have to close expenses and income accounts. These are the two temporary accounts. So these two accounts are closed with return earning account. Then we have to prepare a third trial balance and check the balances whether it is matching. This is the entire accounting cycle. Hope you enjoyed. Bye bye.